Ma'am?
So it looks like for the auto dealers and the unions have reached a tentative deal to end the strikes. I was just reading this while I was waiting for you. It looks like they're going to get 25% pay increases. They're going to get cost of living increases. And they're going to stop the strikes while they're voting on this. Shares report went up roughly 2% during after hours. The stock closed Wednesday at blah, blah, blah. The automaker union participated in intense bargaining Tuesday, Wednesday, da, 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 da. So this looks like it will probably a good thing. People will be happy the way they're kind of spending this. So AN or AutoNation that we talked about, probably want to put that on the notes for a possible long. Alicia?
Yes, ma'am. But isn't this bad for them as well too? They're gonna be losing mad money, like paying all these workers.
If you, this is just my opinion. had looked at what the union was asking for and what they actually got. This is nothing compared to what they were asking for. They were asking for a lot of stupid stuff that didn't make any sense, like a 32-hour week, all of this crazy, ridiculous stuff that was just pokeria. And what they got is basically cost of living increases again, which all jobs do that, especially in this inflation market.
Mm-hmm.
That's just like an annual pay raise. You know how you get your pay raises every year. And if inflation goes up, and then a 25% increase is probably going to be over 4 or 5 years, 3 to 5 years. So that's really, it may be 5 to 8 cents per year, which is nothing compared to what inflation is, because they weren't getting that before in their last contract when they filed bankruptcy. So
Mm-hmm.
honestly, they're just trying to get back to normal from where they were before the unions went into bankruptcy. Because to me, this seems like a normal contract compared to what they have been asking for. So I personally think it's a good thing for the company, um, because they're not going to stop production when people still are trying to buy cars. And I think also they see a little bit of the writing on the wall that, how can I say, houses are starting to go on the market and sit. People are starting to, if you look at the numbers, foreclose, not foreclose, but get their cars repossessed. So it's kind of like the union's not sure how good this market's going to be. So for the next few years, so they
Mm-hmm.
better take their
They
pay.
better take what they get, and
Yeah, because if you let this go on and you let people strike, you may end up be striking yourself out of a job the way things are coming. That's just my
yeah.
opinion, and it means
No, it's a valid opinion. It's some valid points. I have put AutoNation possible long on the notes. Do you want to go over the pre-market and the US closing, and then I can do the quotes, the thing?
no, it doesn't matter. Uh, just to save some time or whatever, I'll do it, and you can do 2 days or 3 days or whatever tomorrow since I have it up.
Sounds
Um.
good.
Okay. So futures for
I'm
now.
gonna be, sorry for the interruption. I'm gonna be trying to find an article or something in Bloomberg.
I have a couple already handy videos, but you can do that too, or you can pay
Okay, then yeah, let's
attention.
go with the videos because we haven't shown videos in a while.
For the future tomorrow, we're looking at everything's looking negative right now. Like I said, it may be a good chance that the auto people can do well. They said today was negative. Um, that kind of perplexes me, but once we look at everything, we will tell.
I
VIX was,
kind of agree because all the stuff that I had was going down.
yeah, it probably is right. It's just that because I was like in my own world with my own caca, I wasn't really trading, so I don't really know. Um, so now, let me.
Let me clear my throat. La 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 la
How
la
do
la.
I bring this caca? So
Are we gonna watch the videos first, or are we gonna do the thing?
we're gonna do the thing first. I'm just
Okay.
trying to get this thing up so I can. Okay, so let's do do the control panel at the top. It will not go away for some reason. All right. Uh, so uh,
Google that.
so Let's look at Negativo. So it looks like it is. This is going to be Negativo. Oops. All right. So yeah. Yeah. I would think this would come up somewhat tomorrow, just as a day trade. So uh we have just where it's at now. It's hit like this kind of level, which gives some support. So uh let's see if it's going to be up day or down day tomorrow. But we've hit the top of this level here, between this zone here. So we'll just see if what happens or whatever. But it I just can't believe it tanked that much. So yeah. And if you compare this to yesterday, oh, it was going down too. And yesterday things were going up. So so oh, I'm sorry. That's today.
This is today. Yes, ma'am.
Yeah, this is aftermarket. It continued going down aftermarket. And that was pre-market. So this was yesterday, where everything was going up yesterday, and this just kind of stayed muscle menos. It didn't really do anything. Then it tanked in the post market, and in the pre-market it stayed the same, and then it tanked again. Time it opened today, and then it tanked again in the post market. So that's really weak behavior for Google. And I guess they didn't like earnings, but this is what Sean always says: you can't just go by earnings. Maybe this number was weaker than the other number. I don't know,
The earnings weren't even that bad.
but compared to the other FANG stocks, because someone else um, had their earnings too recently, which will probably
Tesla
yeah, Tesla was bad. We know.
and Microsoft was good.
Yeah, maybe because of Microsoft. Um, I put this order in just because, I want to live vicariously, um, and hope and pray and hope that we'll get back to 275, so we can get back to some sort of support level and then go down. But it's not looking good. If we get any bounce up, I would take that just to get the extra 60 cent downward play. Um, so still for open, just put any short any pop. Uh, you know. AMD nearly 8%, getting close to 8%. A big candle down. We have a little wick here, so it's below this wick, so it tanked in the aftermarket again. Um, so yeah, it's yeah. Uh, Amazon uh way over 7%. Um, so this is obviously I didn't see any of this because I could have easily got in this because I was busy with my pokeria. Another Meta over 7%. Um, so Meta did better comparatively, even though revenue wasn't as good. Earnings did good. So I've been wrong about Meta. It seems like it's been the better of everything. So this tanked, then it tanked some more, then it went up. It wanted to say, hey, give people a chance to get their money back to get the hell out. This is why you have to have outs in this crazy thing. And then it tanked again. So, I guess if we had watched the after show, we would have saw a lot of stuff going on. This
I wasn't
tank,
here.
which I was thinking Bitcoin would come up, so I've got it in a more terrible situation, and just hoping things can come back. Not as bad. It started to come up, and I thought, okay, maybe I have a chance. Um, and for it to get kind of back here. But somebody that we have been talking to liked where Bitcoin was at and has suggested that Bitcoin was primed to bounce up, kind of like um, Bitcoin was doing good, and we know that when Bitcoin does good, coin does good, you know. And so someone suggested um, um, Nas. I was watching his video, uh, like let's say an hour and a half ago, and he was saying how it was a good point at Bitcoin. And he showed the chart, and I was like, oh, that may be good for coins. So hopefully that says something good about coins, so this can come up. Uh, Roku, no. Intel still in the 30s. That's good. Piton, this was the one I was gonna get out, but I neglected to get out at the end of the day. So I'm stuck in it for another day, and we'll try to get out because I couldn't get out in the after hours. So I'll try to get out tomorrow. Tesla, 4%. These are all negative. Okay. Uh, Negative changes over 4%. Um, this wasn't as bad as others, uh, but in the aftermarket, it continued to tank. Um, so, what do we have? So we have this area for Tesla. Let's see. And usually when it gets to this area, it seems like it just goes down. So, yeah, I would expect it to continue to go down in this turn. So that was bad. Favorite Boeing. It People were thinking maybe it could come up because I guess it had some good news. So but it just kind of just slid down the cliff here. Then gathered itself here a little bit, went down a little bit more, came back up, and slid back down again. So I guess if you were in it, you got $2 difference instead of a $10 difference. But this was bad. Yeah, it was just bad. So then after BA, what did we have? We had Disney, back in our wonderful 80 range. So everything we gathered and made is back to the way it was. Mensana, yeah, it's went below the 170 level. So it's not really anything to write home about. We had here, then here, and then it seemed like it was going down. Then it had a reprieve and came back up. So now I'm just thinking it's continuing where it was at before and just going back down. And based off of this, that would kind of make sense that we could see it come back down to this 150 level. So yeah. Let's see. Yeah, same thing. Nikkei, it was still nearly 2% for Nikkei. Same thing. It tanked in the after hours. There's no getting around this. And there's really no getting around this at all. Let's see. Who knows where we're gonna come back? This had been stronger, but we'll see what happens. But everything seems to be terrible. Apple was the best of the dirty laundry. I'm sorry, not Apple, American. But American had been so weak that it didn't matter. Not even gonna look at this, but so that really doesn't say too much. Home Depot, don't care. It's still not at, even though it's got it to this level here. I guess people could be like, oh yeah, I want to buy it, but I still don't like it only because of the whole recession thing. I want to get way below here, like see if it could go down to this 265 area, because you just can't trust it. This seems very steep, and we supposedly have what you call it coming up. You know, they don't want to. They keep saying soft landing. I'll just call it a hard landing, aka recession. Walmart did okay. It nearly broke even, and it actually, if you look at here, it wicked up. If you can see that, it had a wick up. So Walmart may be trying to come up. It didn't break down in the aftermarket. Banco nearly broke even. It looks like it actually went back up. So I don't get this. This thing, Banco was negative. Oh, based off of where it closed down. Okay, it had went down a little bit. But basically, if you had bought it in the beginning, you made money. So we're still inching towards the $25 level. Tractor Supply still slowly going down. Oil, Exxon, this has been all over the place. We still keep going through our levels. It seems like it's going higher based off of this. That maybe it'll come down here and then come back up. The reason why I'm afraid is because oil's already at kind of like, I don't want to say all-time high, but like 52-week high, definitely. Let's see how far can we go back. Could be all-time, huh? Yeah. Oil's been around for a long time, so I don't know if it's all-time high, but probably all-time high. And
Put it on a monthly to see how back it goes.
I'm just wondering if it's getting very frothy, and I think that this could, like, the war obviously is causing a lot of this cotton. Man, people since been trading this since the beginning of days. Anyway, I'm not gonna keep going that way far back. But this looks like close to all-time high. And my issue here is that the war, yes, will be bringing up the price of oil, but our governments and the people who are supporting Ukraine and um, all these Israeli people, um, they are going to want the price to come down, especially for Russia, not to make money. So they are going to be fighting this. So um, so that's why I think I don't know how long this can go. Also, we're in the winter. So I would be like, okay, prices should be coming down as we get into winter, officially get into winter. And then maybe it can spike up after this level coming into the spring. But that's my concern about saying, hey, let's get into it now, and then it drops down here or even potentially lower because of external forces. And then eventually, I do like it coming back and going above this whatever 120 level. Um, and I really think it's a would be a great deal, but I want to buy low for it. Um, so 23andMe, J&J, Dollar Tree seems to be back on track. Uh, it's still in our zone. If people like that, if people like this for the holiday, it's still in the zone. We were hoping for it to get to 100. If you like this type of stuff, you could start nibbling, and then if it got down to 102 or something again, nibble some more because you're keeping this for the holidays anyway, through the holidays to make your money back anyway. So, Mickey D's, it's going down. We had a level here around this 240 and lower. It was very strong. It didn't even get down here. And start to come back. But it's still capable of coming back down here. The trend is still going down. So maybe we just had a reprieve for a little bit. Maybe it will come back up, or maybe you can get it at this price. Why not get it at this price? Even if you have to wait until after the holidays, still get it at this price, Be cheap, you know? But it did go up today, so. Dix, to me, this looks like a down day because the other day it was at 108. So, uh, no commentary. Do what you want. Um, Try to get at 100 if you like it. But I don't know. I kind of like Dollar Tree better than that. Target, it's at 110. So what does that mean? Nothing really. Uh, yeah.
I'd rather get Walmart.
Yes. Wouldn't we all? Yeah. Had a good day today. Yeah.
Everything was a dumpster fire.
Yeah.
So it had to do the opposite,
It
which
seems
is
like
what it has been doing.
retail here.
It's kind of bipolar. Like, okay, whatever the market is doing, let's just do the opposite because I'm tired.
Yeah. We can have one good day when everything's bad. EBC. Oh, EBC had a good day today. Hmm. Even though
The
Banco.
bancos did. The
Yeah.
bancos did.
So I don't know.
Because all the
We-
tech stuff was a dumpster fire.
Yeah, we're still aiming for our $10. That's another one. Put on the notes, put in an order for EBC at 10 so we make sure we don't miss it. Put an order in to buy a small amount of shares at 10. Um uh Dollar General. Eh, I'm still against this one.
Keep it moving.
Yeah. I almost rather get Target instead of that. Softy. Uh so what? Softy was great today, right?
did overall well because of the cloud, but it still went
Oh,
down
okay. So it gapped up in the post pre-market
because of
arena.
its earnings. It had good earnings, relatively speaking, due to the
But then it
cloud
had
and
to come
AI.
down.
And the AI, however, did do a dumpster fire anyway.
Well, it did, I won't say a dumpster fire, but
Yes, you're right. Not a,
345.
it went down though. It went down.
$7, yeah, it went down. You could have made money on it. But this here, people, when it does this type of thing and it bounces up like that, unless it's a crazy, crazy strong stock, you either think it's from here, it's going to tank a little bit, or it may go up to this level right here and then tank a little bit. So you shouldn't be surprised that it goes back towards the mean a little, you know. So that shouldn't be surprising. Now, tomorrow, yes, it may come back up, but after jumping up from 30 to basically freaking 40, $10, and then 50, $20, come on now, people. You have to think that, hey, it's gonna uh, come back a little bit, you know? So just be wary of those things. Don't just always assume it's gonna come back because that's just normal. Campbell's, um,
This did beautiful today.
yeah,
I wrote some of it. I wrote
my
most of it.
goodness.
I wrote it up all day and I should have stuck with my guns because I predicted that it would go up to like for a let's say for a 60 something, but I was like, it's really out there. I didn't think it would get that high.
Put this
Um,
on a note for sure tomorrow.
yes, ma'am.
On 4090 short CPB. And I just say that just because when something goes yin yang, like it basically went $1.20, and this thing moves what?
88 cents.
Okay, so
Or
93
93
cents
cents,
on
sorry, 93 cents.
yeah,
It was
the
extra.
dollar. So
It was really extra. It should come down somewhat, at least to 40, 50.
4090 short. Yeah, I would think at least to net 40. So this
I would say 40, 50 or 40, 30.
be prepared for that. Uh, what is this? Travelers? Do I want to keep travelers in here? Insurance. Let me see. How much does it move a day? 350. I gotta get
Yeah,
something out. I want to get something out so I can put A in.
that's easy. Come on, Tarjay, get rid of that caca. You're not
No,
gonna
no, no.
keep,
Oxy. I don't get
no.
so I'm gonna put A in and get rid of Ox. All right. So
Okay, so that's good. Got some good notes, madama.
okay. So let's see if AN's doing anything in the aftermarket. It didn't come up or anything, but yeah, and we're gonna put 127.87. Look at long because of the union agreement. You have anything you want me to look at? Oh, let me just go over. Huh?
No, ma'am. I think we should look at your video.
All right. So this was what you call it? It just kind of went down. I played around with it, lost money on it, but it didn't really do much of anything. It didn't go up the second day's worth. It just kind of like acted like in ours. Um, could have made some going down, but it just kind of diddled after this. So let me get here.
I can't hear anything.
Okay, so
You got to go to the
give me a sec.
you have to go to the ellipsis that's on the more.
Give me 1 second. Okay.
Stay, quote, higher for shorter. Joining us now, Canaccord Genuity's Tony Dwyer. Tony, it's great to have you on. What do you mean by that?
So Morgan, our whole case this year was that a soft landing economic scenario is the worst case scenario because it does create that higher interest rate environment. We've seen a 25% increase in rates on the long, intermediate, and long end just over the since mid-September. That ensures a recession rather than debate whether you're going to go into one, because that spike means you're going to have that much more of a slowdown in economic activity. So at some point, the higher you go in rates, the quicker it's going to shut down economic activity and the faster it's going to create to the other side of the mountain in rates.
So you don't think a soft landing is in the cards?
No, I don't. It would be historically unique on the leading economic indicators, on money. There's so many different areas that I see, and I understand that the unemployment rate's still low, but it's 0.4% off the low. Anytime you've been 0.5% off the cycle low, it's been right before or in a recession. So I think, between now and the first quarter, we're going to be in an economic recession. Most stocks reflect it. If you look at the number one question I get, Morgan, is, do you still think we're going to break last October's low? Because as you know, I've been pretty defensive for a year and a half now. And the answer is, so much.
I do agree with him about most stocks reflecting it, the way things are going. But
Yes, I do agree with you
The
because they've
financials, the
always
Russell
said that the
2000 small.
Magnificent Seven is the ones that holding everything up, but everything like below the surface or underlying, like the stocks, they reflect something else that's not being reflected by those seven.
please, and honestly, if you look at the Magnificent Seven, I would beg to contend that the Magnificent Seven reflected too. It's just that the
It's
Magnificent
starting to
Seven,
even more now because they've been skyrocketed up like cray. People were buying into this AI narrative, and like they were just squeezing up, and everybody's like, oh my God, it's gonna go to the moon.
the Magnificent Seven has went up so much that as it's coming down, it's still not all the way down to pre pandemic levels. But
It's
I'd
gonna
say showing itself. But
Small caps, the healthcare space. There's so many areas that are already beaten up and reflecting a pretty bad environment that as those rates come down, we're looking to get less pessimistic, more bullish. I don't care how you want to phrase it. As the market comes down, gets as oversold as it is, and rates start coming down, that could be a good catalyst.
Well, it's an important distinction, Tony, given that you've been defensive for the past year, and arguably maybe you shouldn't have been. So when you say defensive sectors are going to relatively outperform, does that mean they're worth buying here, or just that they're going to go down less?
Well, Jen, I would debate that I shouldn't have been. That if you look back to where the market peaked, the small cap, all these areas are again back toward the lows. So the time to be really negative and fearful of the market and just broadly as defensive as you can get was last year when the Fed was moving rates 75 basis points at a clip. The reason I say the defensive sectors now is because they've underperformed so dramatically because of the rise in rates. When you get rates to come down, if I'm right, and rates come down pretty dramatically over coming months, it'll give a little bit of a tailwind to those areas that have been beaten up on the higher interest rate environment.
So do you buy more of those defensive names now?
Yeah, we've been light and tight for a while now for this year, and that basically means a little bit extra cash and a little bit defensive posture. I don't really see any reason to change that until we get that signaling from rates. Even in the soft landing environment, guys, 1995, 2008 and 19, 2016, any of them, you had a dramatic drop in not just treasury yields, but mortgage yields and corporate yields. And we really there's got to be a catalyst for a recovery, not just an oversold condition, but that catalyst. And as I said, I think that's coming in the next few months for sure.
Astrologer is here to tell you how to send money directly to the bank accounts.
all right. We got 3 more minutes, and I'll see if I can do this one, even though we're not gonna finish it.
worried about earlier this year?
We're in a scenario where we have a stagflationary environment. I think the economy is going to cool off. I think we'll have a recession by the end of this year or the beginning of next year, and we'll still have rising food prices and rising energy prices. And unfortunately, the Fed's monetary policy just can't change that.
I think the market has been pricing a recession since the beginning of the year.
And then began worrying about it again?
But our base case is that the US economy will go into recession by the middle of next year.
Turns out that recession everyone was worried about has finally arrived. But right now, it's only for America's rich. Sticky inflation and a weakened stock market continue to disproportionately pressure wealthy Americans as more and more high-income earners file unemployment claims, according to Bank of America's August 2023 Consumer Checkpoint Survey.
The biggest engine for wealth creation in the world, the driver of wealth, is the stock market. It is also the driver of wealth destruction.
So why should we care about this so-called rich recession? Because of something called the wealth effect. That's when the declining value of financial assets leads to a decline in consumption. And since the U.S. economy relies on consumer activity for most of its growth, fewer people buying fewer things can lead to a stagnant economy. Here's why the long-awaited recession has arrived for America's rich and why it matters for everyone else.
2022 was a year where the stock market was down very sharply, and we started to see home prices turn south, particularly in some of those hot markets where tech jobs, had helped drive those prices up. As the tech sector cooled, you started to see prices fall. So that had a pronounced impact on the net worth of a lot of households in 2022. Some of that has come back in 2023 as markets have rebounded, not quite to the record levels seen at the beginning of 2022, but a hearty rebound nonetheless.
2023 saw a slight bull rally during the summer, despite rate hikes, thanks to a strong and resilient consumer.
A lot of the hurdles that were in place in January are still in place right now. It's not as if we've seen some sort.
So, Ms. Munoz, I'm going to stop this because we have less than a minute left.
This is a really good video. I think we should continue
We
to
can finish it tomorrow, restart it. We'll reserve 10 minutes for this and for
It's a really good video. I want to watch it. And I think the viewers would benefit also. I may just watch it a couple of times, but I really like this video.
Okay. Well, like I said, I will save it for tomorrow, and we don't have much time left. So unless there's something you have left to say in the last couple minutes.
Thank you. I appreciate you taking the time to do a couple